Hello everyone, George DeSantis here with the look of the market for the week ending March 17, 2017. As usual, before we continue with charts, let's read the disclaimer. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice, since I am not one. Let's begin by looking at the monthly chart of the S&P 500. Here is the monthly chart of the S&P 500. As we can see, this thing has been pretty parabolic. However, when we get to look at the next chart, which is the regression channel of the S&P, we'll see that there is room for growth here. There's room for more action on the upside. So what I did recently is I put the 9 EMA in here, that dark blue line, and we still have the instantaneous trend line, which is pretty close to the 4 exponential moving average that many people are using now. This is a 4-period simple moving average, so they pretty much lie right on top of each other. So we can see that since we had these crossovers here, the market has been in an uptrend, and that was way back in the early part of 16. Now parabolic is still below the most recent bar, so the trend is up, and we can see that this market is riding the upper Bollinger Band. So all in all, and the Bollinger Band is expanding, so the market is looking very strong here. Now if we look at the MACD started trending up just before this crossover of these trend lines, and MACD continued to trend up, and now it's above the 0 line, so we can say bulls are in charge. And Elder Force Index is in very high territory here, very, very, very bullish. So this market is really very bullish. Let's take a look at the regression channel to see, is there room to the upside, at least based on the regression channel. Let's take a look. Yeah, here's that regression chart with the regression channel of the S&P. It's a 6-month chart. So what we're seeing here is that right now price is sitting right at about the midpoint, the 50% line. In fact, it's at 53%. What that says is that there's room to the upside. The price seems to be riding that 50% level. So when we talk about extreme levels of being overbought, as it was here, or here, we don't have that right now. So we do have some room to the upside. And that's the point I wanted to make. Let's take a look at the weekly charts. And here's a weekly chart of the S&P 500. At the top of the chart, we can see here that I drew a line at 2350. That's really going to be an important support level, it seems to me. We're going to keep an eye on 2350 because if we're looking for indications of a regression or a pullback, a break below 2350 could be a good signal. It should be a good signal that's occurring. So we'll keep an eye on that. At the top of the chart here, we have 3 candlesticks in a row. The market ran up so strongly from all the way down here that we're taking another pause. It seems to me we're in a consolidation period again. If we're going to get another move up, which we're likely to get, this can be considered a consolidation. The parabolic is below the most recent bar, the last week's bar, so there's no indication to call this a reversal of an uptrend. It's still an uptrend. I put in the 9 EMA here. We still have the instantaneous trend line here in blue, and we have the Kalman filter, which is really a 4-period simple moving average in yellow. In the middle of the chart, we have percent R is still above 80%, so it's still indicating a pretty strong momentum to this up move. RSI 12, likewise, since we had this bounce off of 40%, is way up there. It's way up 60%. above 60%. And MACD, although it's pulled back a little bit last week, it's not unusual for MACD to do that. You can see it pull back a little bit here, but then it move up again. So MACD is still in bullish territory above the zero line. So let's take a look at a daily chart. And here's a daily chart of the S&P 500. Let me discuss a few things at the top. First of all, I drew in an A, B, C, and possibly D, because we don't have a touch of this line yet to make it the completion of an ABCD triangle. So that indicates to me that it's a possibility we could have come back down to a little over 2360, maybe 2365 or 70, somewhere around there, and come close to this line and complete this triangle ABCD. That's one possibility, and then go higher from there. And then we can set a target. The distance between A and B would be our target, but we don't have the completion of the triangle yet, so that's a bit premature to be discussing it. What we can see though is that after we had this big gap up here, we closed the gap as we discussed last week. We found support at the instantaneous trend line in green here. We found support there, and once, twice we found support. We had a nice bullish candle here. We're a bit consolidating here for a couple of days, Thursday and Friday. So no indication to reverse anything here yet, this trend. When we look at MACD is still below the zero line. However, it's been trending up a bit. So we have to, wait to see what develops there. Do we get an uptrend of MACD? Of course, if we bounce from here, we'll do that. Jerry Appel, some of the rate of change indicator is bouncing around the 4% line, so no clear indication of the direction right now. As we can see here, no clear indication of the direction. I also drew in the 2350 line, which we think is a support level, and if we break there, well, we're going to have a major correction, or somewhat of a correction anyway. Percent R is still above 80%, so it's still saying that to us that the momentum is still pretty strong. So let's take a look at something else. Here's a quick look at the chart on which we have the CCI indicator, the Commodity Channel Index indicator right here. And we can see that as long as we're above the zero line, we're in an uptrend. Okay, and right now we're not only above the zero line, we're above the 100% line. So I just wanted to show that, and that supports the notion that we're on a major uptrend here, and we have a bit of a consolidation period. So let's go on. Let's take a look at something else. Here's the weekly chart of the NASDAQ composite, and as we can see, we have this instantaneous trend line here in blue. We have the Kalman filter, which is a 4 simple moving average, 4-period simple moving average, and I put in the 9 EMA. So you can see nice uptrend. We rode this Bollinger Band all the way up, and then we went into a consolidation period, but doesn't show much weakness here at all. The parabolic is still below the most recent bar. So this weekly chart, just as the weekly chart of the S&P shows, is pretty strong. RSI 12, look at RSI 12. It's way above 60%, showing no indication of a weakness. And MACD above the zero line, so the bulls are in charge. Let's take a look at something else, the daily chart. The daily chart of the NASDAQ composite, well, one can say it's been in a consolidation range here, but now it's seemingly trending up a bit, attempting to ride this upper band of the Bollinger Bands. The parabolic is below the most recent bar, so no indication for reversal of this uptrend. And if we look at Jerry Appel's sum of the rate of change indicator, we got it's being whipsawed here. We're being whipsawed here. We had a sell, we had a buy, and now we're still above the 4% line. But we'll see how that develops. I mean, if we pull back here again, we're going to be continuing in this whipsaw fashion as the market consolidates and digests these gains. MACD at the bottom of the chart, MACD here is continuing to trend up from below the zero line. And if you're familiar with Alex's work with MACD, you can know that he also indicates that that's one of the best times to be buying whatever the instrument is. In this case, the NASDAQ Composite. And at the bottom of the chart, Alex's Elder Force Index, the 13 period, in this case the 13-day, is above this trend line. So that looks pretty bullish. So in summary, the monthly chart of the S&P looks very strong. It's almost parabolic, but according to the regression channel, we seem to have room to the upside. So it wouldn't be surprising to see that we get a new leg up up to the 90% line on that chart. Both weekly charts, S&P and NASDAQ, look pretty strong. They're in bullish territory. The daily charts, of course, you will get more whipsaws here, and you'll get on your daily chart more fluctuation, more volatility. But it seems that we are consolidating the gains that we made, and that is reflected more on these daily charts. But all in all, there's no reason to doubt the bullishness of this market. Let's take a look at something else. Here's that chart from stockcharts.com showing us the 5-day average of the new high, new low index. And last week I mentioned that it had turned up and it was about at this level here. And just as it did here in November last year, I was wondering, will it do the same thing here? Well, so far it has done more. It's gone up a bit more, so it's at 1138 now. And well, let's hope that we repeat this kind of an uptrend. This is where that uptrend began last year, you know. So that's encouraging. You can see that the MACD of this measure is trending up. So I wanted to show you that. Let's take a look at something else. And here's the stockcharts.com chart on which we find the impulse indicators, which is the painting of these bars, red, green, or blue. And right now on the extreme right, we can see that the current bar is blue. So on the weekly chart, it allows us to either go long or short. But it appears to me that to be shorting this market is very risky at this time. As Alex pointed out in his recent webinar, the weekly charts on the Dow, the S&P, and the NASDAQ are all in overbought territories, but there are no divergences of MACD. And according to him, the S&P 500, in his terms, the way he put it is, it's in position to rally from here. So if his word means anything, and I think it means a lot, he's a very knowledgeable guy, we don't think we're going to get a major pullback here. Let's take a look at the daily chart. The daily chart is also blue, and what we had is a closing of that gap. You could see it here. From this gap up, we closed, and then we went up again, just as we anticipated. Now we have a small triangle here, and we can also draw an ABCD triangle here too. So I'm anticipating that we're going to complete that ABCD triangle that I showed you earlier, and it's another leg up. Let's take a look at something else. One last chart. We're running out of time. McClellan oscillator trending up just as it did in November at the beginning of this uptrend. So here we have it, McClellan trending up. Have a wonderful day. It's late on Sunday night. I hope to talk to you again about this market next weekend. Bye.